let's look at e.l.f. Beauty. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to the economic signals. So this is in the cosmetics business, and the performance here on average is substantially better than the S&P 500. When we look at the stocks, there certainly is a change in the air here, because we do see that there's been some substantial haircuts from like Revlon. e.l.f. Beauty has also had a bit of a haircut, and e.l.f. is one of those that, it is compared to its peers, it is underperforming, but that could create interesting opportunities. So this is the company's website. We build brands designed to disrupt industry norms, shape culture, and connect communities through positivity, inclusivity, and accessibility. So always clean and cruelty-free. So they do have, corporate social responsibility angle to their products, and quite clearly, they are targeting women, obviously. Okay. So we look here at the chart. So I have drawn in these time cycles. They have been somewhat reliable. There is clearly a connection here between price and cycles. So the interesting thing is that we are currently part of a declining phase, but this is the late part of the decline. So we have seen a pullback. The projected decline here is early July, but of course it's not like going to be perfect. The seasonality is a bit wonky because June is actually one of the strongest months. So far, it's been rather mediocre. July and August are some of the weakest, hence there definitely is a mismatch here between the projected time cycles and the seasonality. However, you could argue that maybe the strength that we tend to see in June, maybe it is pushed, further out. So maybe it will then come in July. That would fit more with the time cycles, but at this point, there is a bit of a mismatch. We were expecting to see strength here in June, and obviously that has not manifested so far. When you're looking here at the RSI, we have pulled back to a level on the weekly RSI that has triggered the previous rallies. Let's remove here the time cycles. So the interesting thing is that we are testing a super key moving average. So you have the purple 20-week moving average is vigorously tested. It has been a reliable support level so far. The current potential problem is that these are weekly data points. The current data point is not computed yet. That will be done by the end of the week. We are so far below though the 20-week moving average. We do not want to close below that level because it has been support in the past. The previous times we bounced, clearly, we did test and then we rallied. Bitdefender really is starting to hate investing.com. Anyway, so it's a bit of a dicey situation because the 5-week moving average here is forming resistance, and it is rather strong. It shouldn't be that strong. So there are some signs that the bulls are a bit spooked. Here on the daily data points, you can see the blue 100-day moving average. So here we vigorously test it, and we do eventually find support and rally big. Support, rally big, test a couple times, then rally. So there have been times in the past, like back here, where we do vigorously test it without the moving average breaking. We are testing it vigorously again, but the bulls need to rally, so far, technically speaking, it makes sense to be bullish contingent on the 100-day moving average acting as support. but the bulls actually need to start buying, because when the bears test and test and test, then there's a risk that it is going to break, and then it becomes resistance. If the blue 100-day moving average, which has supported this entire post-crash 2020 rally, if that one were to break and become resistance, that would be very bad for e.l.f. Beauty. So this is it's a very dicey situation. We have a low RSI. There's many reasons technically why the bulls should start buying. So yeah, the ball is in their court. When we go to Finviz, we do have the trend lines. We have broken here below this trend line. We have resistance here. So the trend line situation is dicey. The bulls really need to act soon. The good news for the bulls is that when you look at the current price and the price targets, you do see that when you look at the target price here, the mean target price suggests a 22% upside from the current level. That is bullish. When we go to Saks.com, they do have a number 3 hold, D value, but there's an A growth and B momentum. Industry rank bottom 18%, no dividend, and there's $1.4 billion in market cap. So I think that if we were to sum up here, my take. Okay, so to sum up my take here on e.l.f. Beauty, I think that when we take, the evidence into account, so the fundamentals generally spoke, there's a bullish message vis-a-vis the current stock price. When we talk here about the more technical aspect, you could also make a more bullish case, but the bullish case is certainly contingent here on the blue 100-day moving average continuing to offer support. So if you look here at some prior times where we bounced from that moving average, so here 23% gain, obviously that's really good. Because you need to compare it with the average performance of the market, and 23% over 25 days, that is very good. 34% over 55 days, fantastic. 36% over 39 days, also way better than what the market will give you. And this is based on clear rules, a very clear support level, a nice risk reward setup. If the 100-day becomes resistance, then the bullish thesis, at least the technical aspect of the thesis, isn't valid anymore. And that's the key thing. Whenever you put on a position, you need to have that exit plan. So the exit plan now is simply, the 100-day moving average, given that it has worked ever since the bottom here in 2020, it should continue to work. The seasonality was also sort of bullish in the sense that June tends to be strong. We are currently in June, so either, based on the seasonality, June will be strong, or maybe the strength we tend to see in June will rather come in July. We also had, the time cycles that suggest that July could be good. So given that we are in the late part of June at the moment, the stars are aligning themselves for e.l.f. Beauty from a more bullish, perspective. But yeah, I think that is, the key thing. Whenever you consider a position, consider the arguments in favor of it and those against it, and have a very clear entry plan and an exit plan. To get all the research, you just go here and click, subscribe. $9 a month is very cheap compared to what you are getting, because there's many, subscriptions out there. You have the entire range, and what you pay is, reflective of, the service. That's just how it works. So when you see people who are way cheaper than $19, they're cheaper because that's what they can't, go higher. And, $19 is actually super cheap compared, to the, to the upper end of the price scale. I mean, there are especially more institutional services, then you have to add digits. Okay, that it would be $200 per month or $2,000 per month. So, and basically the way the logic and stuff like that I use is, what you will commonly see in institutional research.